While the U.S. economy has been showing signs of slowing and inflation is still running at an above comfortable rate, the Chinese economy is growing at 11%. Compare that to the U.S. economy at 2 to 2.5%. Naturally, for an investor, China looks particularly appealing. But exactly where do you put your money to turn China's growth into extra dollars? Hello everyone, I'm Krista Das. My guest today is going to answer that very question. Please meet Rick Pendergraft, editor and investment director for the ETF Options Trader. Rick, thank you for joining us.
Thank you for having me on again.
I'm sure viewers are anxious to hear how you suggest they make money off of China's growth, but you've got an unusual way to play it. Can you tell us about it?
Well, the growth that we've been seeing in China, I'm a little bit concerned about it. One, it is growing at 11%, whereas our economy is growing at 2.5%, and we will get our GDP numbers for first quarter on Friday. But what concerns me is that the Chinese government is wanting to slow down the economy before it overheats, and they've been taking some steps, but they have been unwilling to float the yuan, and they're pegging it to the US dollar. If they were to float the yuan, that would slow down their growth. The other thing that concerns me is that there have been stories of people taking money, borrowing money against their credit card, borrowing money against their house to invest it in the market, and that's very concerning when people are that overzealous about the market that things tend to get overheated there. And this is normally a very staunch conservative culture that handles their money in a very conservative way, and when they go to that extreme, it's very concerning.
Now, Rick, can you tell us exactly what an ETF is? A lot of viewers just don't know exactly what it is.
Okay, exchange traded funds, and I kind of left out the part about shorting a Chinese fund or buying puts against it in that first question. But an exchange traded fund is simply, it's very much like a mutual fund, where it is a basket of stocks that is held in one account like a mutual fund, only the difference being exchange traded funds are tradable like stocks. You can buy into them and get out of them at any time during the trading day. And the other plus is that most of them are optionable. You can buy puts, you can buy calls on them, and take advantage of any movement there.
But isn't it a little difficult for the average investor to use ETFs?
Absolutely not. It's very simply, it's just like buying a stock. It's no different than going out and buying 100 shares of IBM or any other U.S. stock. You can do it on the exchanges, the open market. So it is there. It's very simple. It's actually easier than buying a mutual fund because you can do it at any point during the day, as opposed to a mutual fund. You have to wait for the net asset value to calculate at the end of the day.
Okay. Now, the system you've created is similar to the systems major hedge funds use to make millions of dollars, correct?
Correct. A lot of people call it a core satellite approach, where you have the majority of your holdings, the majority of your assets in a core portfolio, the more conservative investing style. I recommend about 80% going towards that, and 20% going into more aggressive trading, like my service, the ETF Options Trader, trading options against it, and you can really escalate your returns by taking advantage of the smaller portion of the portfolio can actually generate more gains than the core portfolio, the 80%.
Can you give our viewers an example of the kind of returns hedge funds make with this kind of system?
Well, I can give you a couple. For instance, the Prosperity Quest Fund, back in the bear market 2000, 2001, 2002, that particular fund returned approximately 1,500%. Now, more recently, the Trophy Fund returned about 430% over the last 3 years. But I can't vouch that this is the system that they are using, because hedge funds are very secretive about what they're doing with their money.
So why wouldn't a viewer just participate in a hedge fund instead of following your system?
Well, going back to the last question, one of the things is they're very secretive, and they are not always upfront about what they're doing with your money and so forth. The other big consideration is the amount of capital required to get into a hedge fund. Most of them require $100,000, $250,000, maybe even $1 million to go into the account to even buy in. And you have to, according to the SEC regulations, to be a qualified investor, you have to have a $500,000 liquid net worth.
Okay, I see. So wouldn't it be more advantageous for an investor to invest directly in the stock rather than the ETF?
Well, one of the things that you have to remember is going into one stock, you're betting that stock is going to go up or go down, as opposed to the ETF. If you're counting on it going up, going down, you have a basket of those stocks, and if something should happen, I'll give you for instance of Yahoo here recently had poor earnings. And the Yahoo gapped lower considerably. I think it was about 8-9% lower versus the Internet Holders Trust, which is the ETF for the internet sector, or one of the ETFs for the internet sector. That particular ETF only gapped down about 1.5%. So you were more secure when it gapped against you. If you were bullish on Yahoo, you would have been better off being in the Triple H. That's the symbol for the Internet Holders Trust.
Okay. So I have another question. Now, earlier you mentioned shorting a Chinese ETF or buying puts on one. Which ETF do you recommend and why?
Well, there are a number of ETFs that cover China. One of the ones that I like is an emerging market fund. It's actually the MSCI iShares Emerging Market Fund. EEM is the symbol. And that's actually covering not just China, but it's covering Korea, Singapore, Taiwan. It's a number of them. There are others, the iShares FTSE China Fund, which the symbol on that is FXI. That is a very liquid ETF as well. The options that trade on it are very liquid. That's one of the things that I try to keep in mind, is that some of them don't see enough option activity to really work in the ETF options trader. There has to be that liquidity there.
What companies make up the ETF?
Well, the emerging market, the EEM that I mentioned earlier, that particular company, like I said, it's based on not just China, but other countries in the Asian market particularly. But companies like China Mobile, Samsung, Taiwan Semiconductor, those are three of the bigger holdings within that ETF. So you're getting a flavor of not just China, but there's Korean stocks in there as well. So you're getting a very flavorful pick of the Asian markets.
Can you tell us some statistics? What kinds of returns have these ETFs posted?
Well, the iShares FTSE China Fund that I mentioned earlier, that was actually the #1 performing ETF last year, and it was up over 81%. The Power Shares China Golden Dragon China Fund is what it is called, is PGJ is the symbol on that one, and that one was up 51% last year. That one's not as liquid in terms of the options. That was one of the reasons I did not mention it, because it's just not as liquid as I would like to see for the ETFs. But it was up 51% last year.
And your system takes advantage of these ETFs, correct?
Correct. I look for short-term moves in the market, whether it be up or down. I'm not particularly concerned about which way it's moving, as long as it's moving, and as long as I'm on the right side of it. So, but right now, for instance, the ETF options trader subscribers, they had a recommendation to purchase puts on the EEM, the iShares MSCI Emerging Market Fund, and we're holding puts on that right now. I think that what we saw back in February was just the beginning. That was just a blip of what's possible. That moved where we saw the EEM drop 10% in one day. That kind of a move is certainly capable of happening at any time, and I think that once that investors start getting more reasonable and more rational about what's going on in the Chinese market, we may see a more extended downturn for these markets.
Very interesting information. Rick, our time is running out. Where can viewers get more information about this?
At investorsdailyedge.com, under our products tab, you will find not only the ETF options trader, but also the triple wave investor, which is another one of my services.
Rick, thanks for sharing, and thank you for joining us again on Market Insights.
Thank you for having me again.
You're quite welcome. You can also get more information about investing in Chinese ETFs right here at taipanfinancialnews.com. That's it for now. I'm Krista Das. I'll see you here again next week on Smart Investing Market Insights.